Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, professor of economics at Ewha Womans University. Professor Kim, it's been a while. Hope you had a good holiday. Thank you for coming on.
Good afternoon, Devin.
Well, in the minutes from the latest meeting, officials at the Federal Reserve say the U.S. economy is far from where it needs to be, and they're going to stick with monetary easing. There are those, however, who say fears of rampant inflation are overblown. What do you make of the situation at the Fed?
In U.S., there is a ongoing expectation on higher inflation due to coronavirus vaccine distribution and higher raw material prices. But according to the minutes of January U.S. Fed policy meeting, U.S. Fed clearly refused the expectation on inflation pressure. And they say that the Fed would need to hold interest rate very low and continue bond purchase to help spur the economy's recovery. This consensus is unanimously agreed by U.S. Fed officials in January meeting. So U.S. zero interest rate and liquidity supply will be continued until actual inflation exceeds 2% level on annual basis.
So they're sticking to the 2% target. And now stocks in New York were mixed for a second session on Wednesday. Tech taking a hit, but the Dow at another new high. What's the story in the global markets?
There were different movements between Dow Jones and NASDAQ yesterday. Dow Jones increased by 0.3%, but NASDAQ decreased by 0.6% in a day. Steady yield increase in U.S. Treasury long-term bonds gave a negative impact on stock market, but U.S. consumption increase more than expected limited U.S. stock market decline. Actually, in January, U.S. retail sales increased by 5.3% on monthly basis, and industrial production, something like GDP, also increased by 0.9% in January.
And here in Korea, a dramatic session in the market today. The main indices wavering at first, then closing quite a bit lower on this rise in cases of COVID-19 and other factors. Tell us about the local markets.
Along with other Asian markets and European markets, domestic market dropped in a large scale today. Kospi had a negative 1.5% daily return, and Kosdaq also had a negative 1.3% daily return. Increasing number of coronavirus infections, over 600 per day, raised concern on another round of resurgence and social distancing. Foreign investors and domestic institutional investors' sale was the main factor to decrease the market.
Now, Professor, the price of Bitcoin is now well over $50,000 on $52,000. In fact, a market cap of $1 trillion. So now it's entered the realm of silver and gold and the big tech firms in terms of size. How do you see this latest Bitcoin rally, and what are its prospects as a haven asset?
I think it is too early to assess the acceptability of Bitcoin as a safe haven asset. First of all, Bitcoin price is too much volatile compared to other risky assets, such as stocks and exchange rates. It is true that more influential institutions are investing on Bitcoin, like BlackRock, Tesla, MasterCard, Visa Card, and Chinese central bank. But there is a question whether these institutions, along with others, begin to invest on Bitcoin in earnest in the near future.
There certainly is. We will have to watch that with great interest on our program. Professor Kim, thank you so much for sharing your insights with us today. We appreciate it.
Thank you very much.